welcome to Crypto Disrupted. I'm your host, Trent Lipinski, and I'm here today with Matthew Sullivan. Matt, can you tell us a bit about what you're working on?
First of all, Trent, thank you for inviting me on. It's an absolute honor to be on your show.
Thanks.
So I just thought that I'd get the formalities out of the way before I stampede to the description of what my company is. But yes, you're very kind to invite me on. What I run is a company called Quantum RE. So this is a startup company that we set up late last year. And what we're doing is we are taking a particular asset class in the real estate market and we are tokenizing it. So we're solving a number of problems, both in the investment market, and we're solving a problem for homeowners. And we're also solving what we think is a major problem in the current crypto markets.
Awesome. And can you give a little bit about your background and what you've done before this?
Yeah, I think the best way of describing myself is systemically unemployable.
So I can relate.
Yeah. So in other words, I've been an entrepreneur for 25, 26 years. So, most of my working life, I've been running my own businesses and everything from telecoms companies to trading platforms to, finance companies. I was a stockbroker in the late 1980s. So I'm not sure if any of your listeners actually remember the 1980s, but it did exist. It was before mobile phones and the internet had even been conceived, let alone invented. Yeah. But I used to be a stockbroker in the Far East markets in Hong Kong, Singapore, Malaysia, Indonesia, Philippines, Thailand. So as this sort of, 20-something-year-old single man, I was running all around the Far East, unleashed, single and very dangerous at the time, but it was a fantastic, fantastic time. And then moved into a more of a corporate finance role. And then in the mid to late 1990s, ended up working very closely with Richard Branson for about 5 years. The company that I was working with was a very small team. There were sort of 4 or 5 of us in the company. We had all been stockbrokers together. And my boss and my very good friend at the time wrote a letter to Richard Branson saying, "Dear Richard, we own Lindstrand Balloons. The round-the-world balloon trip is the world's last great adventure. I think you would be a great person to fly with us. How about it?" And he wrote back saying, why not? So in the mid-90s, so we were responsible for building this crazy balloon contraption where Richard tried to fly around the world in a hot air balloon.
That's probably a pretty rare story.
Let's face it. Yes.
Yes. Yeah. So you worked with Richard Branson to try to get him to go to travel around the world in a hot air balloon.
Yeah, no. He said yes. We said, look, no. That's it. So we said,
that's awesome.
One of the companies that we bought, we knew this guy Per Lindstrand. Rory, my boss, had known Per for a number of years because Rory had jumped out of this hot air balloon at 36,000 feet or something and got the world high altitude freefall record. So very good friends with Per. We ended up, when we had our corporate finance company, we ended up buying a majority stake of Per Lindstrand's company and setting him up in business just down the road from his competitor. And at that point, we, wrote to Richard, or Rory wrote to Richard saying, how would you like to fly around the world in a hot air balloon? So, we ended up being very closely associated with, and we worked with him and his corporate finance team for a good few years after that. And we ended up getting involved with Virgin Jeans, Virgin Cosmetics, Virgin Bride, V2 Music, a few other projects along the side. So it was a fascinating few years for me, I can tell you, just being involved in the inner workings of the Virgin Group.
And I mean, as an entrepreneur, you basically got to then work with, probably one of the most famous entrepreneurs ever, with the Virgin Group and working with Richard Branson. So And then now you're working. So what's brought you to the blockchain? So, you've had this incredible career dating back, to the 80s. You did all these successful projects and worked on all these amazing things in the 90s and early 2000s. So now here we are, 2018, and you've decided that, that your next step is going to be a blockchain based company. So what brought you to the blockchain with everything that you've been through as an entrepreneur so far?
My best answer is faint signals from the future. So I was involved in a billing company back in, God, I wish to stop saying this, back in the late 90s or something, because it does date me somewhat. But at the very beginning of when the internet began to get some traction, which is around 98, 99, we set up a company that was the first company that was able to start billing data by the packet, as opposed to companies billing by the month or by the week. So we were able to bill information based on what type of information it was. So if it was a piece of data, we could bill this much. If it was an image, we would charge that much. So very early days in terms of being able to attribute value to data. And the concept that we actually raised some fairly decent VC funding from, back in 99. The concept was to build something once and to create this big machine that would become part of the fabric of the internet. So this whole concept of us being one of the infrastructure players. So we were building this machine that would allow us to bill for all of the transactions that flowed through our system. I mean, it worked really well right up until the point that it didn't, which was when, and the timing for us wasn't great because we were just at the point where we were about to secure our second round, and then there was all sorts of issues, with 9/11 and the market basically bombed. But to answer your question, the faint signals from the future, the blockchain is one of those things that comes along, and there's only maybe one or two or maybe three of these types of opportunities that you will see in your lifetime. These big seismic events that are world-changing events. The internet was one, blockchain is another. I can't really think of another technology or another thing that I've been involved with that has that same massive groundbreaking or life-changing potential. So, but I can tell you, it took me a while to actually get on frequency because I remember listening to Tim Draper speak at a crowdfunding conference 4 years ago. And he was saying, the thing that I'm really most excited about is the blockchain. So I'm sitting in the audience, I'm busy Googling the blockchain. And I'm going, I don't get it. I mean, what's so exciting about that? It's like a distributed ledger. I mean, don't see it myself. Tim, are you sure? Time has proved that he did know what he was talking about. And I wasn't alone, just trying to understand what the blockchain is and why it's got such a big, why it's going to have such a massive impact on what we do. But to get back to your question, one of the things that I set up when I came over here 4 years ago was Crowd Venture, which is a real estate crowdfunding platform. And what I wanted to do there is take real estate assets, put them onto a platform, leverage the recent changes in US securities laws through the Jobs Act, which allowed us to start marketing smaller projects to a much wider audience. And the theory is, you leverage the technologies, you leverage the internet, which allows you to go out to a much broader audience. And that means that you can take an asset and chop it up into tiny pieces and crowdfund it, hence the name crowdfunding. But there were all sorts of friction points with that process. The technology was one issue. The regulations were another issue. They were quite difficult to navigate. You needed to jump through all sorts of hoops in order to be able to provide these investments to people through an internet platform, and rightly so, to protect the investors. But it didn't quite have that sort of magical liftoff. And then really, this is a very long answer to a very simple question, Trent. I'm very sorry about this, but
no worries.
The main answer is, when I finally did figure out what the blockchain was, which was, it was only about a year or so ago, I actually sort of put two and two together. You think, well, actually, you've got something that's incredibly illiquid, but very valuable, which is real estate. And you have the blockchain. And then the real thing that made it happen was when these ICOs started flying around and we became exposed to tokenization, because what tokenization does is it creates liquidity. It allows the technology that's provided by the blockchain, it allows it to be integrated and embedded and associated with things that normally would be very illiquid. And so it really was that sort of aha moment where I thought, hang on, we've got real estate here, we have the blockchain, we can find a way, or let's see how we can find a way to take this illiquid, valuable asset and using this technology, turn it in a way that makes it fly free, that makes it liquid, that makes it tradable. Let's see what problems we can solve with that.
And so one of the things you were talking to me a little bit about before the show was, so the way your platform works is you actually are tokenizing the equity within real estate, so within a home. So can you give kind of an example of what that would look like for the audience?
Absolutely. And this is the most exciting thing, because tokenizing real estate, real estate is a massive vertical. There's all sorts of different types. There's single family, multifamily, apartments, commercial, land, you name it. There's every vertical you can imagine within that sector. The one that we were most interested in was the one that was most challenging, which was, and yet at the same time, potentially the most valuable. If you are a homeowner, you'll have a mortgage or you'll have a loan which is secured against your property. But over time, you build up the equity that you have in your house. And you can start with a little bit of equity, and that comes from your down payment. But over the years, as you pay your mortgage down, the value of your house increases, the value of your loan slowly decreases. So therefore, the value of the home that is actually owned by you, which is known as the equity, that increases to the point where naturally over time, when you've paid off your mortgage, you own your house free and clear. But the real problem is as you are building value in your home, how do you unlock that? It's of no use to you. It's locked up in the bricks or mortar or in your home. It's dead money effectively. So the only way that you can release value in your home from the equity is to go back to the bank and borrow money secured against this. And that works really well if you can afford to take out that money. And if you meet the bank's credit scoring regulations or requirements. And if you promise to use your loan to refit the kitchen or to remodel the home, you can't go and buy a Ferrari with it in most cases. So the problem that we're solving is let's take all of the homeowners in the US that are sitting on equity and say to them, would you like us to buy some of that equity now? You don't have to pay us back. It's not a loan. There's no interest payment. There's no monthly payments. When you sell your house, remember that a piece of the house is ours. So when you get the sales proceeds for the house, some of that has to go to us, because what you've done is you've sold us some of the value of your home today. So that's a real estate asset. And what we're doing is we're taking that asset and we are then connecting that through the blockchain to tokens. So those tokens are backed by physical real estate. And what we do using our platform is we add all of those pieces of real estate together. So the token represents the value of all of those pieces of real estate. So you're not exposed to one particular home. And the benefit that brings is, if you've ever wondered what's behind Bitcoin and can't really come up with an answer, you're not alone. But to be able to say to you, this token is able to be bought and sold between buyer and seller. It's able to be traded on securities exchanges. But the most important thing is this token represents value because it's represented by this pool of real estate assets, and we can prove what those assets are. That pool is audited at the end of each year, and every quarter we update the value and we publish the value of that pool, and we tell you what the underlying value of that is on a per token basis. So it's what you're able to do is get involved in cryptocurrency. We get all of the advantages, all of the efficiencies, and all of the magic that this new technology brings, this tokenization brings. But at the same time, it's a bit like going back to the gold standard, where you know that your dollar is backed by a certain amount of gold. You know that your token is backed by a certain amount of real estate. And my last point is that the token holders benefit because they have something that's real and measurable. But the homeowner benefits because the capital that is raised by the sale of these tokens is used to buy their equity interest. So they get capital that is theirs that they can go and spend on whatever they want. And they don't have to pay it back in the way that they would have to pay back a loan.
Got it. So you're essentially tokenizing, equity within home ownership. And then that tokenization, instead of a loan, whoever is the token holder when that property sells then gets, essentially a cut of, whatever value that token is in, percentage of the total value of the home. They actually will then receive, cash or whatever currency that the property is selling for. So then you're essentially, then you've got a model now where you're not relying on the banks for being able to take equity out against your home. And now, and then could there be a situation where someone eventually buys back the tokens? So if someone wanted to do that, would that be an option in your system?
Yeah, there's all sorts of options. The thing to remember though is that the tokens, if you own our tokens, and again, this is something that we're building at the moment. So, and we're hoping to be live, within a few months. But the token is not tied to a single property. So that's the most important thing, because in some cases, values of real estate can go down. So if you're holding a token and you're tied to one particular property and you're the unlucky one because that's the one property that goes down in value, you don't want that. So what we do is we add all of these properties together, we put them in a pool, and the token represents the aggregate value of all of those different property interests across all these different geographies. So you can spread your risk. But you're absolutely right. When the properties are sold, we make a share of the increase in value as well. And that profit goes back into the pool. So as the pool grows in value, then the value of the underlying tokens should grow as well.
Interesting. So then what happens what happens with the value of the actual token itself? So the value of the token itself, if everything's lumped into a giant pool, so then now that token is reflected based on the value of the pool, not individual properties. So, so does this have kind of the problem of, the people who get in early can get in, at a very low rate for the token, or, do you see this being a more stable token, or what what kind of volatility are you potentially expecting?
Well, we're hoping that there's very little volatility, because the great thing about the housing market is it's not terribly volatile. It's not like the stock market, which is driven by all sorts of different drivers, sentiment being one of them. But we know, particularly recently, we know how volatile the stock market can be. But house prices don't tend to move anything like as quickly as the stock market does. So you don't have that volatility. Secondly, your question was, do people that get in early get a benefit? Well, there's no discount. So in other words, it's not like a token where if you get in early, there's a discount, because the tokens are tied to the value of the property.
Yeah.
So what we're hoping will happen, and this happens in other analog situations where you have companies that have assets and their shares represent the net asset value of the company. Some trade at a slight discount and some trade at a slight premium to the company's assets, depending on whether or not the shareholders think that the company is going to sell all of the assets or for a number of different reasons. But our token should be fairly stable. And again, this is what we hope. We're certainly not making any sort of guarantees or promises or predictions, but we hope that the token will trade in a fairly narrow range and will trade predictably and will trade very closely to what the underlying value of the assets is that it's backed by, because we don't want it to be volatile, and it shouldn't be volatile, because what we want this coin to be is a coin that represents stability and predictability. And there is definitely a place for that, I think, in the cryptocurrency universe.
No, absolutely. No, it's a fascinating concept, because there's definitely a lot of potential in the real estate market for automation. Essentially, is what we're talking about. Is in this use case, you're cutting out the banks as the middleman. You're creating this tokenized economy. So now you can build smart contracts around these tokens. You can buy and trade and sell these tokens. You could potentially have a futures market based around them. You could do all sorts of things with them, and it would almost be this kind of kind of ecosystem where all the transactions are just simply based on equity and value of actual existing real estate. So you're creating almost this like unique financial market specifically just for real estate values. And then it gives you all the tools and all the advantages of the technology to be able to leverage and do all of these other types of trading and do all of and then also automate the processes around owning this, because a cryptocurrency transaction is, it's A to B, it's very simple. So now you've got the ability to potentially buy these tokens and essentially gain, liquidity in other people's property without having to go through, all the paperwork of having to literally buy property. So you're just kind of buying a digital representation of what that property is and what that value is without having to go through all the legal processes, without having to go through all the paperwork, without having to go through, escrow, the months of time to buy property, and, all the logistics of that. So you've essentially created a system that basically eliminates most of those barriers of entry and would allow normal people to actually invest in real estate without having to actually literally own physical real estate.
And you're absolutely right. And there are caveats. So, the caveats this is a security. There are risks associated with it. So this is not the cure for everything. What we're doing is we're allowing technology to make the investment process more efficient, and to allow the capital flow process more efficient. But you're absolutely right, because what we're doing is we're potentially allowing investors who want to get involved in real estate to invest small amounts of money. It's the crowdfunding idea, where you allow people through technology and through the removal of those barriers that technology allows to happen. People can invest small amounts in lots of different properties, and therefore they can get exposure to the real estate asset class. They can do it today, remember, with REITs and with other shares that are linked to real estate. But with our platform, it allows, there are other enhancements that we're bringing out that will enable you to pinpoint the specific property. So there's a whole range of different investment options you'll have. But the interesting thing from my perspective is, let's say that this is very successful and we get a lot of capital coming in because people want exposure to single family homes where the person who lives there is the person who owns the house. And what better steward could you have of your asset than someone who owns it with you? So you're effectively partnering with this person. So it's not like having a tenant where you run the risk of them pouring cement down the lavatory. You know, the owner of the house, in most cases, is is proud that they have a house and is also very happy that they've got a little bit of extra money from the sale of equity. So you've got someone who's really looking out after your interests. But if you take a large amount of capital and you release a large amount of equity, then what does that do to the economy? Because, and I know this is very meta stuff, but if you're not lending money, remember, so you're not increasing the leverage or the debt that people have. In fact, it's the opposite. What you're doing is you're allowing them to sell some of the assets that they own. So they get money and they're going to go and spend that on something. So could this be an interesting boost to the economy? Could this be a way that allows money to flow from your home and from that sort of piece of the balance sheet into your wallet? So I know this is getting a little bit esoteric, but the sort of implications, what you know what I mean, what the blockchain is doing, because it's so massive and scalable and international, you can have buyers from all over the world that want to get involved in US real estate that will be able to do that through this tokenized platform, because it's more universal. There are fewer geographical boundaries. There are fewer foreign exchange restrictions. It's much.
I mean, this already happens. So, I'm in San Francisco, I'm in the Bay Area. So, foreign investors, what they do is they set up LLCs, and, they buy and purchase properties here, knowing that they're going to increase in value. And, they use these LLCs essentially as shell companies to be able to make these large business transactions and, do it as a business and as a legal entity. They pay an agent in the state of California to represent the business, and they acquire these properties. So there's properties in Palo Alto that are owned by a foreign investor right now, today. Russian, this happens with Russian investors, Chinese investors, investors from Singapore, other, Middle Eastern wealthy nations. And some of those properties are just sitting empty.
Yeah,
so there's no people in them. They don't even bother renting them out because they know all I have to do is sit on the property and I'm going to get a return on my investment in 3 years or 5 years.
Absolutely.
In some cases, they're even doing it for money laundering purposes.
Yes.
And, the federal government's had to investigate this. And, there's some legal loopholes that, these foreign investors are exploiting. And then the problem is, again, some of these properties are just sitting there empty. So, we've got a housing crisis here in the Bay Area, and there's empty houses sitting next to your house that no one lives in that aren't being rented out. So it's like, it just makes the problem worse. Yes. So in essence, you're creating a better system that would alleviate that problem, that, would actually allow people to stay in their homes, that don't necessarily want to sell. And they could actually then take the profit off of their, the profit that they're earning off of their properties and liquidate it into cash so that they could reinvest it.
Exactly. And let's take an example. Let's take someone that's been living in the Bay Area for the last 10 years. And I think if you look at the growth, particularly in certain areas, let's take Campbell, for example. If you look at the speed of growth in Palo Alto compared to Campbell, it's not going to be as fast in Campbell, but still it's pretty rapid. So someone that's had a house there that has been struggling month in, month out for the last 10 years to put their kids through college and pay the bills, they've managed to hang on to their house and, not default on the mortgage. And they've managed to make a really significant nest egg in the equity, but they can't afford to borrow another dime because they're absolutely maxed out, credit cards up to the top because of their life expenses. So those are the people that run the risk of being foreclosed on because they can't afford to keep up the few $100s a month they need, even though they could be sitting on $500,000 of equity. So those are the people that we help.
Got it. Yeah, no, I can definitely see the potential there because it would help keep people in their homes. And actually, this is almost a solution to, what happened during 2008 during the market crash and what happened to the housing market there. If people had the option of being able to, essentially sell some of their equity and take some of that equity out of their properties, liquidate it, and then, refinance their loans or whatever, then maybe not as many homes would have been foreclosed on. So this is the kind of systems, these are the kind of tweaks to the economy and financial systems that the blockchain enables that we just didn't have 10 years ago.
But let's explore that, because one of the questions that we get regularly is, why the blockchain? Why can't you just do this using traditional, stocks and listings and processes? And the answer is, you can. We could do it, but it would be a tiny fraction of a percentage of the possibility of what it could be using the blockchain. Yeah. And if you understand how inefficient the current sort of stock markets are, and there's no fault of the stock markets, it's just because of the legacy systems and the way they've grown. If you look at the way that settlement works, the speed of settlement, what you actually get, you're not actually getting ownership of the stock. You're getting a document that promises that you might that you have ownership. So there are actually it's like a series of IOUs. So there's that, plus there's the time constraints, plus there's the number of parties that have to be involved in maintaining your shareholder register, in enabling the stock to transfer from one person to another. There's a centralized clearinghouse, which is the DTCC. There are only certain types of people that can communicate with the DTCC. So you have clearing brokers. So there's this whole strata and hierarchy that's grown up over the years as the stock market has evolved in terms of size and in terms of breadth, in terms of numbers of offerings. But what the technology within the blockchain and smart contracts allows us to do is make those processes far more efficient and almost instantaneous. And issues like KYC and anti-money laundering and Banking Secrecy Act and OFAC requirements, we can use technology to wrap that sort of KYC layer around each of our tokens, so they can only be delivered somewhere if that person who is going to take delivery meets the requirements of that particular security. So that means that what the blockchain does is it is a much, much better mousetrap in very simple terms. It allows us to do these types of transactions across borders. It allows us to fragment and fractionalize our tokens into tiny pieces, which you can't do with a share. It allows them to move from wallet to wallet, literally at the speed of light. It also allows us to keep track of every single transaction, every single asset, and prove to the owner of that asset that they've just bought, or that token that they've just bought, that they really have bought what they think they bought. So in other words, it's doing exactly the same thing as the stock markets and NASDAQ and the OTC markets do right now, but at a far faster rate with far more protections and accuracy. And that's what is needed, and that's what's going to allow real estate to move from being this sluggish yet very valuable and enormously large asset base into something that begins to create momentum and start moving and become more liquid and tradable.
There's also another element to that, which is the data transparency. So as we were talking about a little bit earlier, who owns the data is important in this situation, because essentially with a distributed ledger and with blockchain, you could have a real estate company that downloads the ledger and has a full copy of the blockchain. Then you could have another real estate company that also has a copy of it. You could have just an individual who, personally just wants to participate and, wants to run the ledger themselves as well. So you've got the ability to have multiple people and multiple entities and agencies and, real estate brokers and banks and, other investors. They all have transparency of the data. So there's no secret, there's no centralized, compartmentalized data. Everyone potentially has access to the database that should have access to the database. And they can see what transactions are happening in real time in some cases, and know exactly, who's buying what and when and why and how. So that information with our current centralized systems is completely, it's lost. A lot of times it's literally a paper trail. So there's no computer system to log into to even go verify that, that trade actually happened. You've got to call someone on the phone and hire the right broker, the right person to go find that data for you. So it eliminates all of those processes.
And the next stage, and again, imagine that houses, now the other sort of dichotomy is that the house, and we're beginning to, I suppose, sort of upgrade this side of the equation, which is the tokenization and the movement of the value. But the house still is registered, with a title company, still has to go through escrow. There's still, attorneys involved in the process. There are realtors involved. So on the other side of the coin, you've still got this very legacy set of systems, which is very paper driven, very inefficient, time consuming and expensive. But over time, and time is the next 3 to 5 years, many of those processes will migrate onto the blockchain. So imagine a world where the title to your home is held on a blockchain, where all of the documentation and the escrow processes are held within a smart contract. So the transference of ownership in real estate could happen within the blink of an eye, as opposed to several weeks of drawn out processes. Then if it's very easy to transfer ownership of real estate at the real estate level, not at a derivative or an option level, but actually at the real estate level, then what's that going to do to real estate? It becomes much more fluid, because if I can buy and sell a home in the same way that I could buy and sell a stock, which is entirely possible, then homes become, does that mean that the prices for homes will become more volatile? If people can trade homes in the same way that they can trade gold or silver or diamonds or stock, is that where we're moving towards?
I mean, potentially that's what this technology enables. So, it's definitely a very real possibility. I was just talking to, one of my girlfriend's friends who's a lawyer, and, I was kind of explaining to her that the blockchain is going to put a lot of lawyers out of business, at least their current practices. Obviously the law will evolve and they'll be able to move on to other things, but a lot of the tedious paperwork, a lot of the processes that they have to go through, to be able to do, asset management and property management, that's going away soon.
I think so. The thing to remember, funny enough, I was having a chat with some people at a conference over the weekend on precisely this. It's not going to go away very quickly for the lawyers, because the technology is here, but the technology has to exist within the current regulatory framework. Otherwise, it just withers on the vine and becomes another one of those technologies that's not adopted. So what has to happen is the players in this space have to be cognizant and very sensitive to how they operate with the existing fabric. Yeah. And that's where, the lawyers and the attorneys and the regulators become an incredibly important part of this, because for this technology to be adopted, it needs to be able to work with the regulators and with the current mechanisms so that they can over time, be upgraded and move on to the technology. So I think the lawyers are actually, and the regulators are our best friends, because, we rely on them, because without them, this just could be, roadblocked at every opportunity.
Well,
with
yeah,
you know what I mean. But with the regulators, if they're being friendly towards it, which they are. I mean, the SEC are being incredibly open-minded about how they view these types of technologies. I mean, obviously there are many different things they have to take into account, but there is an overall willingness to adopt it and to allow this to grow.
Yeah, exactly. So the lawyers are just going to have to evolve, essentially. And it's actually a good thing for future lawyers, because it means they're going to actually be able to focus on creating value for their clients and practicing the law, rather than spending all their time on process and paperwork.
Exactly.
So
that's
it's
exciting. I mean, that's the brave new world, isn't it?
yeah.
Just think about. I was at an intellectual property lawyer conference, which was really interesting, because just the importance of the protection of intellectual property and the technology that you need to protect IP, if it can fly around the world, at the flick of a switch. So that's just, there's a whole, I was sat on a panel. My opening speech was something along the lines of, for those of you who haven't heard about the blockchain, you need to understand that this is probably the most important and significant change that you will see in your lifetime. And I don't think that is hyperbole. I think that this is far more impactful than the internet was, and it'll happen far faster and be far more deep and far reaching in terms of how it impacts us.
And I'm just curious, not to pivot completely off the blockchain here, but do you have any thoughts on machine learning and artificial intelligence?
Not that would be of any use to anybody listening to this podcast, I'm afraid.
All right, because I kind of see machine learning and AI as kind of a similar technical innovation to the blockchain, but actually, it's what I'm seeing is that it's to get to basically the blockchain is the foundational technology we need for AI and machine learning to actually be useful in the future. So the problem with machine learning and AI is you need a lot of data. You need major data sets to be able to feed the machines for them to be able to actually learn from it. So the problem is right now, all of our data is segregated into these centralized systems. They can't just hop onto a distributed ledger and go download all the data. You can't just go on Twitter and just go download everything. You could create a bot to do that, but it's another conversation.
That's another podcast. Yeah.
Yeah. But, so there's a potential here where there's going to be this additional layer of smart contracting and this additional layer of innovation that can take place, because what can happen is, now that we have the foundation of the blockchain, now that we have these smart contracts, now that we have this kind of marriage between the legacy systems and this new technology, it actually gives machines and it gives machine learning the tools that it needs to actually digitize physical assets. So then now, a bot can start to do some of your trading for you. And we're starting to see that there's a lot of traders now that they don't make any decisions themselves. They run everything through a bot. So we're already at a point where that's starting to happen. And everyone's using all these different algorithms and, different equations for doing their trading and that kind of thing. So do you have any thoughts on that based off of, the fact that you've been on Wall Street, since the 80s, and you've kind of watched this evolution of things? What are your thoughts on, what happens when the machines kind of start doing a lot of these processes for us? Is this a good thing, a bad thing?
It's difficult to actually have an opinion that's valuable on this, really. But I don't really have anything really. I got some. The views are that the more data you have, the more able you are to predict outcomes. Mm-hmm. So in other words, if you are removing these centralized hubs of data and you're putting that information on a publicly available blockchain, then that means that you've got more access to data. And if you have more data, then you can model potential outcomes based on current scenarios. But you can use that for things outside of just trading. There seems to be a lot of focus with many commentators about the impact of this on the stock market or on this. But I think just what we should do is actually sort of take a step back from that and say, okay, that's probably a given, but what are the other types of industries that are really going to benefit? Let's talk about healthcare, for example. Let's talk about real estate. Because these are industries that will make a quantum leap forward in terms of their efficiencies. If you look at the change that will occur to Wall Street because of the application of blockchain technologies, it's not going to be as significant as the change made to healthcare, for example, by having a secure centralized database, or identity. What will change in the way that how we manage our identity? Because if we have this concept of a tested identity that is secured by blockchain, then I can prove who I am. What does that enable me to do? So I think those are for me, the more interesting areas to look at. Because with Wall Street, I think it's a case of just getting that extra fraction of a decimal point, which does separate you from the extra 99.997% of the trading population.
You're wearing your entrepreneur on your sleeve right now.
Yeah, it doesn't.
I definitely agree with you. I think the potential is in markets that are currently inefficient, that are burdened by legacy systems that have inefficiencies, that could benefit from the efficiencies of moving to decentralized and distributed technologies. And that's I like I said, I can see the entrepreneur in you saying, okay, these are where the opportunities are, because people have been using algorithms to trade for decades. So have the tools gotten more advanced, and can you get a better robot to go trade for you? Yeah. But at the end of the day, where the real value creation is actually going to happen is in markets like real estate, in the healthcare industry. Supply chain management. That's a huge opportunity.
Yes.
And then even, one of the things that I've been looking at, and I've had a lot of conversations around lately, is actually in data centers.
Yeah.
And I think that's, often overlooked in the blockchain space, is where are you going to get the compute for all of this? We talk about, all these distributed and decentralized systems, but it's not decentralized if people aren't running it on their different systems and their different data centers. So I think there's going to be a huge, foundational opportunity to essentially have blockchain as a service type data centers that are going to offer compute and be the actual processing centers that are going to be how you decentralize, across all these different data centers. So, those are the types of services that, for example, you could have a data center in Arizona that, is serving the real estate industry, and that entire data center is just dedicated to processing, blockchain transactions for real estate.
Yeah.
So there's huge opportunities, on all over the spectrum, really, in terms of, all the way down from the actual hardware to, all the value that can be created in making these systems more efficient.
Definitely.
Do you have some final thoughts before we wrap up here?
No. Well, yes. No, yes. Indecisive. I used to be, but now I'm not so sure. It's just a very exciting place to be. And the key thing for us is, how do we maintain focus? And that's, so there are so many opportunities. And I think really, for everyone in this space, it is really, let's find an area that we're really good at, and let's build on that, and let's deliver it. And I think really now there's been an enormous amount of hype. There's been a lot of talk about what the blockchain can do. I'm really looking forward to seeing some real use cases that have an impact on everyday people. A real positive impact. So I think that's what I'm looking forward to, is seeing these new technologies, and I want them to come out of the very elitist, almost sort of technical world, and it'd be great to watch them become mainstream, and for people to actually see the benefit that these types of technologies can bring.
Yeah, no, I agree. Execution is number one when it comes to startups and entrepreneurship. Everyone can have a $1 billion idea, but very few of us can actually execute to make that $1 billion.
But also have the impact. Now it's about impact. Now it's also, let's create a better DApp or a better app for something. Let's see if we can use this technology really to make a difference. Really to change things, for the positive. That's what I'm looking forward to seeing. It's not just a little bit of extra profit here or an increase of efficiency there. How do we use the blockchain to really make a significant difference to a lot of people to their benefit? And that's what I'm really looking forward to this technology delivering.
Yeah, the social impact, I agree, is huge for this technology. And it's, we just have to make sure that, again, that the startups that are executing in this space are delivering on their promises and, making these tools a reality, because ultimately the end goal here is, to create better systems that, so you don't have to stand in line at the DMV, and you don't have to be in escrow for 90 days if you want to sell your house, and you don't have to go through all these laborious processes that are just, they're draining. It just presents challenges. And all of these things are just, they're wasting time. And we only have a limited amount of time on this planet. So,
yes.
We want to try to make things efficient and, make sure that we can create, better systems that socially support us and allow us the freedom to be able to, participate in free markets and do this kind of stuff.
Definitely.
So thank you for coming on the show. It's been awesome.
It's been a pleasure. Thank you. It's been great speaking to you.
Yeah, it's awesome to have an entrepreneur on the show with your depth of experience. So thank you for coming on.
Pleasure. Wonderful.